If we would see a collapse of the paper trading system centered around the COMEX with all these unallocated precious metal positions, you could expect gold to move much higher than $4,000 or $5,000 per ounce. I wouldn't be surprised when gold would shoot up to $10,000, even $20,000. I wouldn't be surprised that silver would move in a very quick and violent way towards $100, $200 per ounce, because silver is needed as a commodity, and that's different than gold. So there's even an analyst I follow, he said you could have a gold-silver ratio 1-to-1. So which means, let's say gold goes to 10,000, silver could go to thousands of dollars per ounce. And silver is such a tiny market, it's such a small market, and it's so important for the industry.
The global financial order is quietly shifting beneath the surface, and gold is once again taking center stage. The entire paper-based trading structure, anchored by the COMEX and its unallocated gold contracts, stands on increasingly unstable ground. If this paper system were to unravel, the actual price of precious metals could increase dramatically, not through speculation, but through a revaluation of trust and tangible ownership. Gold could surge beyond $10,000 or even $20,000 an ounce, while silver, as both a monetary and industrial metal, could violently reprice toward $100, $200, or beyond. The physical market is too small to absorb the demand once confidence in paper promises fades. Willem Middelkoop, author and founder of the Commodity Discovery Fund, explains that this unfolding reality isn't just about price, it's about a systemic transformation. Nations are quietly repatriating gold, signaling distrust in Western custodians like the Federal Reserve and Fort Knox, where audits have been absent for decades. Meanwhile, the BRICS alliance is building a gold-backed trade settlement system to rival the dollar-based model, signaling a new era in global finance. As this shift accelerates, the West clings to fiat illusions while the East builds with sound money. The reintroduction of gold into global trade marks the beginning of a historic monetary reset. Now, we present the clips from Willem Middelkoop's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
It's my idea that many people think this is the top of for the gold market. It's just like 1979 or 1980. Gold is reaching $4,000 or $5,000. That will be the top, and then it will go down again. But I'm a bit afraid that the collapse of the paper trading system, of the COMEX paper trading system, will send gold, silver, platinum, palladium much, much higher. And that's all to unfold still. If we would see a collapse of the paper trading system centered around the COMEX with all these unallocated precious metal positions, you could expect gold to move much higher than $4,000 or $5,000 per ounce. I wouldn't be surprised when gold would shoot up to $10,000, even $20,000. I wouldn't be surprised that silver would move in a very quick and violent way towards $100, $200 per ounce. Because silver is needed as a commodity, and that's different than gold. So there's even an analyst I follow, he said you could have a gold-silver ratio 1-to-1. So which means, let's say gold goes to 10,000, silver could go to thousands of dollars per ounce. And silver is such a tiny market, it's such a small market, and it's so important for the industry, for the solar panels, and even for the iPhones. So we as a fund, we are as investors, we are accumulating ounces in the ground, waiting for these very big spikes to happen. I think that the big prize for us as commodity investors is not what the money we make now. We're up 65% year to date. That's great. We have 200 million euros under management. That's great. But I think the big prize is still ahead of us. In the early 2000s, we saw in quite a number of European countries that citizens started to question members of parliament about the gold holdings being kept by the Federal Reserve, and they were asking their governments to repatriate the gold holdings to Germany, the Netherlands. I've been part of such a movement myself in the Netherlands. I once wrote an open letter to the NRC Handelsblad titled Nout, waar blijft ons goud? Calling the Dutch central bank president to return the gold holdings from New York to the Netherlands, actually, which they did partially. But we know from the German situation that the German central bank asked for the repatriation of part of their gold reserves. And then they had to negotiate with the Federal Reserve about the return of their gold. And then the end of the negotiation was it would take the US 7 years to return only part of the German gold holdings. Well, when you go on a holiday, you ask your neighbor to hold your gold or silver or your jewelry, and you return from holiday and ask it back, and he says, well, you need to give me 7 weeks. Then you know he sold it and he can't deliver it. So it's another indication that the US has played so many tricks, even with the gold holdings of the sovereign European countries, which they were storing for them, because Russia was the risk of Russians invading European countries was that large that they would better have their gold stored in the US still. When you study the history of Fort Knox and you study the history of the Federal Reserve holdings in New York, in Fort Knox, the US gold holdings are stored. Supposedly, over 8,000 tons of US gold should be stored in Fort Knox. The gold held for sovereign countries like the Netherlands or Germany, that's all stored with the Federal Reserve in New York. We have this awkward situation that all requests in the last decades to be able to audit, to check or to see the gold stored in Fort Knox were always met by lots of stonewalling. There was the last full audit of Fort Knox was in 1954. The last visit by members of Congress to Fort Knox was in 1974. If you study pictures from this visit to Fort Knox from 1974, you see these pictures with all this gold stored in a very unusual way. If you compare that to pictures of other central banks, how they store their gold, you see it's like a facade. They show you a room filled with gold, but it's not in the normal, traditional way how you store physical gold. Then if you look at the situation at the Federal Reserve in New York stores gold for countries like Germany and the Netherlands. There's only one picture available of the gold stored in the Federal Reserve. You see an open vault door and again a facade of gold. You can't look into the room, you can't look into the vault. And if you study that picture, it's clearly built like an Hollywood facade. You know, you show the whole vault is filled with gold, but you can't actually look into that vault. And again, if you compare that with pictures of the traditional way gold is stored by central banks, you see, well, for me, it's another indication of all the tricks being played by the US in this war on gold. So the financial system is backed by gold or it isn't backed by gold, and it's fiat only. I think we're morphing with the financial system to a new phase where gold is being reintroduced into the financial system, but not to build a fully backed financial system like we had during the days of the gold standard. And if you study the actions by the BRICS alliance, it's very early days, but it's quite clear that they're building a trade and settlement system, financial system, which is almost in competition with the Western US dollar-based system. So I envision that the US dollar-based system will stay operating in almost the same way for a number of years. But the BRICS countries, China's leading that effort, is building their own separate system where gold is being used to settle international trade. And we've seen the first signs of that already. So part of the US war on gold and keeping the US dollar in control for world's financial business and trade is to make sure that the oil of OPEC countries was only sold in dollars. We call that the petrodollar deal. That was originated in 74, 3 years after 71, when we had the huge dollar crisis. And Kissinger convinced the Saudis that when the Saudis would agree to only sell oil for dollars, US would give the Saudis a security guarantee and build Saudi into this great modern nation. We know that Saudi accepted payments for oil in non-dollar currencies. That started a few years back by trading with China. We know Russia and India are trading oil in non-dollar currencies. So we see more and more of the world trade developing in non-dollar currencies. And more of the BRICS trade is done that way by avoiding the dollar. And the net settlement of these trades between countries can be done in gold. So we see the first signs of a build-up for a new financial and trading system coming from the East. Zoltan Pozsar was the first to really write a great analysis about it only weeks after the Russian invasion in Ukraine in 22. The jury is still out where we will end and whether the BRICS system will be the main financial and trading system for, let's say, the next 50 to 100 years to come. But currently, most of the international trading is still done in US dollars. So it's very interesting to see the birth of this new system. It's very interesting to see that gold is coming back into that system.
The global monetary system is showing unmistakable signs of fracture as gold once again rises from the shadows of financial repression. For years, central banks quietly accumulated record levels of physical reserves, over 1,000 tons annually, signaling distrust in their own fiat-based creations. When the very institutions that print money begin exchanging it for gold, it's more than a hedge. It's a confession of systemic weakness. This quiet accumulation marks a turning point, the early phase of a worldwide flight from paper promises to tangible wealth. The shift gained momentum after the weaponization of the dollar exposed the fragility of global trust. As sanctions and financial manipulation intensified, nations like China and Russia turned to gold as a shield against Western influence, transforming it into a strategic financial weapon. What began as reserve diversification has become open monetary warfare, an East-West divide built on gold-backed sovereignty. The coming reset won't be negotiated in conference rooms, but decided in vaults. Let's get back to the interview.
I'm quite sure that central bankers at one time will initiate a comeback for gold in the financial system. Because without bringing gold back into the system, hyperinflation could develop worldwide. So these are the first cracks we're seeing now. It's alarming, but we shouldn't forget it's not the retail public which is fleeing towards gold. It's the central bankers which are fleeing towards gold. So although they don't discuss it within the OMVIF circles, we know from the data that we've had 3 years in a row, and this is the 4th year in which central bankers are buying over 1,000 tons of physical gold for their own holdings. So actually, if your business model is printing money and you're using that money to buy physical gold, you show a huge distrust in your own fiat money business model. And I think the public understands this. They feel it because of the high inflation. So we have this worldwide gold rush developing in which central bankers and the retail audience all join each other. And we haven't touched upon the huge amount of unallocated gold, which means gold being sold to people which isn't there, well, stored for them in volts. So it's like the musical chairs. Everybody is looking for the last physical ounces of gold. And now we are reaching a phase where the system could become quite unstable, and central bankers will feel the need to bring gold back into the system in one way or the other. Central bankers always knew that the US could use these tricks because they have started since the 1970s and 1980s, but it was always very limited. But after the US used all their power in this treasuries war to really start to hurt Russia in the last 10 years, it became obvious to countries like China and most other countries which were very close friends with the US that one day this could hurt them. And when you start to think about the weaponization of the dollar and how you can address that question and how you can defend yourself against those actions, you need to go to gold, because gold is nobody's liability. So you don't need anybody's permission to have these gold reserve. If you own US treasuries, you always need the treasury to accept to take them back and to give you back your money. I always advise rich people who come ask for advice to minimize the number of doors between you and your net worth. So if you buy physical gold and silver and you store it yourself, there are no doors between your net worth and yourself. So that's the safest. The only risk is that somebody breaks into your house or puts a gun to your head and asks for your gold. And that's why I don't have any gold and silver in my house myself. But you need to store it quite nearby. And countries also started to understand this. So this explains why we've seen this huge run towards gold, especially since the Maidan revolution some 10 years ago. And if you study China's policies on gold, you can really see that China started to accumulate gold after the collapse of Lehman, because the collapse of Lehman showed to countries like China that the US wasn't as strong as the US always, positioned themselves. So China and Russia understood that US is actually very weak because the dollar is such a weak currency, and the financial system, the dollar-based financial system turned out to be such a weak system. So the countries in the East started to buy gold after 2008 and really start to accelerate that process after the start of Trump 1, in which the US started to fight China with the new trade war. When you study this history of the weaponization of the dollar, it's quite clear to me that countries like Russia and China started to weaponize gold. So they're using gold as a financial weapon now to harm the US. Because China and Russia understand very well what kind of tricks the US has used to support the dollar system and to start and develop this war on gold. One great example, which I mentioned in the Big Reset, is that GATA had a conference in the Yukon, I think in 2001 or 2002. And actually I wanted to visit that conference, but I wasn't able in that year. But there was a Russian representative present at that GATA conference, in which all these tricks by the US on the war on gold were being discussed and explained, and the Russians sent one of their representatives to that conference. And it was a very tight-knit, very small conference, only maybe 20, 30 people there. And the Russians came there to study this US war on gold and started to understand how the US used this war on gold to support the dollar, and the Russians and soon after the Chinese learned to understand how they could use gold to defend themselves against these US policies. So I was never surprised that gold would be used more and more as a financial weapon to position countries like China, Russia, but also other countries. The Polish central bank is buying huge amounts of gold now. The Czech central bank is buying huge amounts of gold. Even the Irish central bank has started to buy gold. So central bankers, they aren't stupid. They know the role of gold in world's financial history. They understand that gold, this new trend to flee towards gold, not only by the retail public, but also by central bankers, is a big new trend. It will only stop after a monetary reset worldwide has been succeeded. And that's becoming more and more difficult because, as I write in the epilogue of the big reset, we're coming from an era of cooperation after the fall of communism. The former communist country took over the Western capitalist system, built their own state capitalism, but we were in an era of cooperation. But now we're moving away from cooperation, and there's this confrontation between the East and the West. And it will be very hard to move world's monetary system to the next phase when there's no agreement between the East and the West. So the alternative is war. And I'm quite afraid about that. And if you listen to the Western leaders now, they're almost like preparing their citizens for war, for confrontation with Russia and China. And that's something which worries me most. And gold is clearly being used as a weapon for the non-Western countries to weaponize, well, their part of the financial system in a fight against the West.
Gold's resurgence marks more than a financial shift. It's the quiet admission that the age of paper dominance is nearing its end. Central banks, once the architects of fiat confidence, are now leading the retreat from their own system, buying record levels of gold to anchor what's left of monetary trust. This is not speculation, it's preparation for what comes next. As the East accelerates its gold-backed trade framework and the West tightens its grip on a weakening dollar, the divide between sound money and printed promises is widening. Gold is no longer a relic of the past, it's becoming the foundation of the future. When both nations and individuals move to secure what can't be printed, it signals a reset in motion. The world is quietly repositioning for what will define the next financial era, one measured in absolute value, not paper illusion. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.